Welcome to another episode of Let's Talk Stocks. I'm Sasha Evdokov, and today we are on episode 161, and we're going to go and look at some charts. It's been a little while since I've done this for you guys. We did some things in the webinar. If you missed the webinar, be sure to go ahead and sign up to the newsletter list so you know when the next webinar is, which we typically do at least once a month. But today, what I'd like to do is go in detail on some charts, take a look at some of the recent pullbacks, some sell-offs that we had, and also today's recent bounce. So here I am in TC2000. If you like this charting platform, by all means, take a look at the Traders Fly website. There's also a discount there if you're interested in this platform. So first things first, what I'd like to do is just kind of take a look at what's been going on. If we look at the SPY here, this is kind of the main one a lot of traders watch. The 255 level is kind of the initial key, but really what I'm watching is more around the 2560 level. Now, we've had a couple of spikes when we take a look at the volume of some bearish signs. And as you know, markets don't go straight up. They don't go straight down. They wiggle, they pop, they retrace, they pull back. So all these things kind of is a bit of consolidation for you to be able to go into higher prices if those things unfold. Now, a couple of things that are normal to watch is normally what you want to see on pullbacks is you want lighter volume. So this is what you normally would like to see on pullbacks. And then when you see that, that means you still have more room for the upside. Now, what's interesting recently is we've had a little bit of a stronger pullback. So we've had some stronger volume signs on those pullbacks. And because of this, this is where the volatility spikes. The volatility will spike when you have more sell-offs, because volatility spikes when you go down, because that's the speed. Volatility is about the speed or the fear in the marketplace. In other words, the amount of puts that are being sold and bought. So when we look here, basically the market was a little bit toppy, and we've had a few kind of interesting dynamics here. I'll show you in a second. We've had this support level that was created, and right here it actually broke below that. So we broke below that support level on Wednesday. Of the support of 256, you could say 2565, but really I'm looking at 2560 because remember, these support regions are really regions. They're not just a line. So it's really that level or a big bar level that's really the support. So that's what you're looking is that price area that's being held up. And that's kind of what we're doing right here. So it's kind of a good 10-point spread. So every time we've kind of came back so far, we've been bouncing. That's what the market's been doing over time. It's been doing it for months. Actually, for the last year, it's almost been doing the same thing. It's been buy the dip mentality. So what you want to do is always pay close attention of how far stretched we are, either to the upside or to the downside. You want to look at it on the short term, medium term, and the long term. So if you took this out and you look at, let's just say, a Bollinger Band concept, let's say you go out to the weekly, you can see we were a little bit stretched out here according to the earnings from, companies like Google, Microsoft, a little bit stretched on this upper side for more of the medium to longer term. So we're in the upper end. So a slight little pullback, even 1%, would have kind of put us more in a normal range. If we get more into the 3-day, 2-day, or 1-day, you can see before we started that sell-off right there, we were at that upper range. And once we got that sell-off, we came in right around that Bollinger Band level and bounced right off of that. So you could look at it and say, hey, this is just a standard little pullback, little consolidation right there. And boom, we had that bounce. Now, the question is as we look at today, is today overstretched again, just like this range right here on our pullback recently since this last week, that was a little overstretched. So now the question is are we overstretched again to the upside? Now on the longer term, I don't think so. I think we could still have higher prices, but on the shorter term, I think, a little bit half of that pullback. So instead of right now we're up, I think about 22, 23, 24 points, looking at the screens. Even a pullback of 5 or 10 points would be a little more normalizing and normalized to where the market should be. And this, of course, the reason it's moving so quickly is just due to the VIX being much higher. So here you notice we've hit some VIX around the 12, 13 level, and now we're down in the 11, where normally we've kind of been trading around the 9, 10 level, and that's been kind of the normal VIX. So you want to be very careful. With a higher VIX, you'll get more whipsaw, and that includes whipsaw to the upside and whipsaw to the downside. Now, one other thing that interested me, and I wanted to share that with you, and that is kind of it's a little bit of a trickier thing to see, but you could look at it and think about it. So, okay, so here, if we look at this, and you can kind of look at it on a short term, this is not for the long term, right? Not even the medium term. But here we have kind of, if you take a look at this, this is kind of your head, and then you have your shoulders right here. So it's kind of creating like a head and shoulders pattern that was created right there, and we got that bounce. Okay, so again, something to think about, something to consider. Is this just noise for today? I don't really know. I can't tell you. What I'm watching is how strong this volume move is. And if this volume bar for today is much stronger than these other big spikes or even higher than the moving average, then I would say, okay, we're back into, buying the dip mentality. But for now, it's just one day, and one day doesn't make a trend. So you want to always be a little more careful that all of a sudden change your whole game plan. For me, looking at the overall market, I see this market. Here's our upper range. Here's our upper band and the way we've been moving. Here's kind of our lower range and lower band. So we've been playing around in that area, and here's a little bit of an outlier. So you could see we've hit these little points right there, and we're isolating between that upper range and lower range, and then we're going at this angle. Now, is that angle a little bit too steep? Time will tell. I mean, for now, it seems a little bit more normal and healthy. I would think it's a little bit of a slower sloped angle, maybe a little bit healthier. But right now, we're kind of going at this more accelerated angle or level. So I'm always looking at the speed. If you really bring things out, let's just say a little bit further, again, you can kind of look at it in this way. Here's our angle of elevation again, and how we're moving. Okay, so here, and here's kind of that angle. Would I prefer kind of more this angle? Yeah, okay, that's fine too. It just really depends on your personal trading style. But overall, the angle that we're moving on it's not too extreme to the point of, well, we're moving at an extreme steep angle like a rocket ship. That would be a little more scary. So even though that today is a little bit strong, there's things always rebalance themselves in the marketplace. So always remember that. If you look at some individual stocks, and as we take a look at companies like Amazon, they're still holding up very well, especially since the breakout from their earnings. They're doing fantastic. The concern for me here is how far stretched are we on a company like Amazon? So again, you look at the daily. What scares me a little bit about the overall market is that right here is you have that 1,100 level, and once you get these pullbacks, and if you get some nasty movements to the downside, well, this whole range is pretty big. And the reason I share with you the pullbacks, or the things that scare me, instead of like stocks that I'm excited about, the reason I share with you the things that I'm actually worried about or scared about is because that's what allowed me to be successful in this business, is looking at things and I guess worrying or looking at these things and being concerned about them is what allows me to be aware of, hey, well, this is possible. This is what could happen. If it goes against me, this is really a possibility. And when you see those things, it allows you to plan for them. So think about that in mind, rather than me looking at this and saying, hey, well, the possibility of this stock, and just telling you, hey, well, it could go to 1,600, and it's a different mentality. Whereas when I look at this and I say, well, what's the risk? I'm always looking at what's the risk. Well, the risk is if we get back into 1,100, we could actually come in and get in and fill into that area, into that $1,000 range again. Those are kind of the risks. If you look at Microsoft as well, this one, it's not even following through like, some of the other stocks, because right here you have a big open gap. So again, it could sell off for $3 lower. And when you look at this Bollinger Band, I mean, it was way outside that range, at least on the short term. And if you look at kind of even the medium term, on the weekly, you can see we were way outside that range, and that's potentially why we had some of this digestion, that the little pullback that we've had even in the overall marketplace. Taking a look at Square, also powering higher. Look at it, way on the upper range right there on that weekly. Continues to move to the upside, stair-step pattern. That's what the market's doing. That's what the market's demanding. You look at Facebook also. This is our line of support right here. So this is our support, came in, didn't fully touch it or bounce at that touching point, but it did kind of come in right at this peak right around mid-October, and then we bounced just today. So we are getting a little bit of a bounce. You could draw a little bit of a resistance line right there, and you can see we have that almost 0.75% to the upside in Facebook. If you look at Netflix, nearly a similar kind of pattern at the 190. We're getting a little bit of a bounce, but again, you're watching the 190 because you're right there at the moving average. So all these things come together at these peaks, and you're noticing a lot of these stocks, they're coming right there at these key levels. And if they can't hold, really that becomes problematic, because now you have all of these things either dumping or selling off all at once. And also if they bounce, well, they also bounce a lot of them all at once as well, and that's why you get big moves sometimes to the upside and to the downside. So let's take a look at a couple of other stocks here that are fairly common on my list. We'll just kind of sort it by price real quick. Go through Google. Also, you can see here we have a little bit of support level right there, and of course a little bit of a gap, right? So again, that's the concern, right? There's the gap. You have a little bit of overhead resistance, so we are digesting and consolidating in this price level. Tesla was doing pretty poorly up until this point, and that was our support level. Just when you look at it, just due to the overall swing points of the past within this company. And now we're coming in, we're getting a little support, and there's our little bounce. Could we get a little bounce right here up to this level and then a sell-off further? Yeah, it's possible, absolutely. Nothing would be wrong with the stock if it did that. It's just normal, healthy movements. We're getting in, we're filling that gap, and a little bounce higher would, you know, create some additional movements, or could create additional movements to the downside if that bounce is weaker. So again, you're watching, could bounce here and it could reject. If it bounces and holds, well, in that case you want more volume, and again then the next level to watch is this upper double top range, which would put you at 390 on the stock. CMG has not had some positive news lately. I talked about this stock probably getting to about 240 before it may actually get a nice solid bounce or some positivity. You can see we kind of are creating this ABCD pattern right here in the stock, and that's why I projected 240. We had a longer term ABCD pattern to the upside in this stock, and you can see how that played out over multiple years. But now to the downside, we have the same thing happening. 235, 240 could be that range. Baidu also attempted to, you know, break out here out of this range. You can see from the weekly chart, but rejected it, and it rejected at the 250, too far, too fast potentially. And when you go to the monthly, you can see didn't make it. So now we're back into this range. About 215 is your support on that one. And if you're looking for the shorter term, about 230, which is kind of where it's bouncing right now, but I'd still be a little more careful on this one. Your ultimate key support level is right around that 200 level. If we go into BABA, this one continues to move higher, nice accelerated fashion. So just continues to do real well. You can see just the overall steepness of the curve just continues to move. If we look at Apple right here, same thing. Move was a bit stretched right here, get a little bit of a pullback, and now you got that bounce. If you look at this pullback, I believe it is about 38%. So right here, yeah, we're at 38.2% pullback, which is right around the standard Fibonacci sequence right here. So you got this little counter trend bounce, and then we'll see what happens here at that level to see if it digests at 173 or so and go from there. Win, I know, has been just continuing to do very well since that 2016 level. We had that digestion I talked about in critical charts. Another digestion stock continues to do well. I wouldn't be surprised around this level if we start getting a slight pullback sometime soon. Just a little one, not a huge one, but just a little one, just because that stock is coming into a swing point right here at this level. So that could be any time right now. It could be a little more at the highs of that peak at 160, 161. So that's another possibility. If you look at P&G, still kind of doing the same thing. Here was our resistance, broke this, coming back to retest it. We're going to see if it can break back into this range or this level. If it cannot, it may reject it and roll over. And then ExxonMobil also was a little bit stretched. So when you draw this out a little bit further, you can see we came into this resistance and we got some selling over here, some heavy selling coming right in, and it's tanking pretty seriously. So anyway, so again, just due to technical resistance levels. And let's see here, a couple other ones. AMTD, I know, broke out right here, broke out this level, came back, tested support. So if you go into the daily right here, so you can see there's our resistance, broke out, came back, retest support, had a little trouble getting above that, came back into this level, little support right there, held it there. Again, that's your key level. Unfortunately, the volume here is a little bit weak, which I don't usually like. You can see it kind of dying out a little bit on the break, so I would be a little more careful on this one. And let's just see what else we have here. Bank of America, some of these banks, again, coming into these key levels of support as well. So when I watch these things, you know, for me, I'm looking at it, and so many of these stocks are at some key levels. You know, it's really a fascinating moment, because that's when you get those movements. That's when you get the movements to the upside real quick and to the downside. And for you, if you're trading this market and you're kind of new to the marketplace, you want to be very careful with a little bit of a higher VIX, because it'll whip you around a little bit more than maybe you're used to. Because if you just started trading and you were trading around this level or with a lower VIX mostly, and you were able to dodge a few bullets, that's fantastic and great, more power to you. But on the other hand, you also want to learn how to trade in higher VIX environments or higher volatility environments, because they can whip you around. Here you need to be a little more patient. Also, just things will, because they move so much quicker, you either have to be quicker on the trigger or be a lot more slower on the trigger, because you'll want to buy things or you'll want to sell things quicker. So so just be a little more careful here as we wrap up the week. We are getting into options expiration, which is tomorrow here on the 17th, and really Saturday for regular standard options versus the index options. So, you know, just watch your positions, make sure they don't expire to where it's unfavorable for you. Be very careful on those short positions, and make sure that you constantly be taking profits into strength in fast markets. So with higher volatility, you'll want to go ahead and make sure you take some off the table, whether that's a half, a quarter, a fourth, a third, whatever it is, 10 shares, 50 shares, however many you're trading, take a little bit off, because then it reduces your position, reduces your risk, and allows you to have more capital when new opportunities present themselves in faster markets, because we are more in a faster VIX market. And this is kind of where the next question is, well, are we getting a VIX move that's going to move like this to this channel? So we're getting now this little pullback, but are we going to get a little bit even higher bounce into the 16 next? So that's my next little bit of concern. You could say, okay, so are we going to get kind of that move, which would then sell off the markets even faster and harder, sometime over the next, who knows, month or a couple weeks. So be very careful, open to ideas of what could happen. That's how you really stay alive in this business. That's how you be more consistent and profitable in this business. Thank you so much for joining me today. I hope you enjoyed this video. Just wanted to share with you a little recap, some insight on just the overall markets and some stocks, so that way you can see what's going on. It's a good time to do this because we're in a faster market environment. As we get into the holidays here, Thanksgiving, Christmas time is usually a good time for the market to go higher. But with this market, anything can of course happen because it's dodged a lot of other bullets in the past, and we've been doing things that are different than the normal cycles. So anyways, be careful, always take profits in the strength, trade them well, watch your risk, and in the end, enjoy life a bit. So thanks for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. And I'll see you in the next video.